Hello there, my friends, and welcome back to another episode of TA with MK. My name, as always, is MK, and in today's video, we're just going to give you a quick kind of market update, a little more of a macro market update, kind of a zoomed out, bigger picture of some of the charts that are my favorite that we always talk about on my channel, things like the DXY, things like the S&P 500, and then, of course, Bitcoin itself. And super duper duper quick, before we dive into today's content, I want to do a quick plug to a $100 giveaway that we're going to be doing this week on my channel via my recent partnership with BITGET. Roll it. Yes, my friends, you heard that correctly. Due to my recent partnership with the crypto exchange known as BitGet, they are being so kind as to, via my channel, do a $100 giveaway. All you have to do to qualify is just use the link in my description to create a brand new BitGet account. For those of you that created one from the link in my video from the other day, don't worry, you're already qualified for this giveaway. And basically at the end of this week on Friday, we're going to draw out someone's email that created a brand new account, and should you win, BitGet is just going to apply straight to that new account $100 in USDT, which you can then use to begin spot trading, futures trading, copy trading, all the things that I'll be making videos about in the coming weeks on my channel. So good luck. Remember, again, all you need to do is use the link in my description, create a brand new BitGet account, and then just wait to see if you win on Friday. Good luck, and thank you, BitGet. And with all that out of the way, let's get into today's video. As always, if you're enjoying the content, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. So the chart that I would like to start out on today's video with is the SPX, or the S&P 500. This is the daily chart. Now, I mentioned in a previous video that we had broken out of this large falling wedge that had been acting as resistance for over a year, dating back to late December, early January of 2021 going into 2022. And as you can see, this large falling wedge had been acting as resistance on 1, 2, 3, 4, and 5, 6 different occasions essentially before it finally broke out and began to kind of consolidate above the falling wedge. Now, this happened in early January of this year, 2023. We were tracking on lower time frames, a few different patterns. We had this ascending triangle, there was a little falling wedge, a few things that I mentioned in the previous video, and we had targets for all three. We also mentioned the invalidations, and at this point, if we were to update this chart, which I'll do now, so now that we've cleaned the chart up a little bit, we can kind of give some bigger macro analysis that I think most likely will start to come to fruition or begin to play out, so to speak, over this next week. This is just kind of my opinion. It could take a few weeks, could happen in tomorrow, honestly. But as I kind of briefly explain what I'm watching, it'll make sense to you why I'm saying this. So bigger picture, which is what we're looking at on this daily chart, is that we've broken out of this falling wedge, right, that we were inside of for over a year. And at this point, this looks like it's potentially just a breakout and a retest. You can also see that this yellow moving average that was resistance once right here, and then even though it peeked its head above, it essentially became the resistance again here. This would be a break and a retest. Let me clean this up and zoom in real quick. This could just be a breakout of the falling wedge and essentially a retest of not only the falling wedge, but this previous area of support, as well as, and most importantly to me, the 200 simple moving average, because in the simplest of terms, being above this is kind of macro bullish, being below it or it acting as resistance is definitely macro bearish. So basically what we'll be watching for in a nutshell over the next few weeks, maybe even honestly could start to play out over the next few days as it relates to the daily S&P 500, which I do believe, as always, kind of plays a role in what crypto is going to do. As traditional stocks go, typically Bitcoin and crypto goes, are we going to retest this wedge and the daily 200 and continue to push upwards and onwards, or are we going to break back inside of this pattern, which basically would make this entire move here one big bull trap? And at that point, we'd be looking for, at the very least, a retest of this green zone of support, but more likely over the next few months to a big part of the first half, at least, of 2023, in my opinion, we'd likely see some sort of a retest back down to one of these zones, whether it's a big double bottom clear down here, maybe a slightly higher low, or of course, worst case, and we'll kind of have to just see how it goes if and should this happen, maybe we put in a brand new low for the S&P 500. That being said, until the support is actually broken, we have to continue to look at this on a macro level as just a retest, right? If some of these major moving averages and this major pattern that it broke out of it with a bit of volume. It wasn't like it was just some weekend that it broke out. I believe it happened midweek. In fact, it happened on like a Wednesday or a Thursday of early February. And at this point, traditional markets will open up again tomorrow, at least here in the United States. And we'll have an opportunity to see just kind of how your bigger whales and your bigger traders and institutions and so forth, kind of how they view this level. Is it a buy the dip opportunity, or is it, a big bull trap and a sell-off opportunity? Now, if it winds up just being, a buy the dip opportunity, there's a good chance that we could see much, much higher prices out of the S&P 500 over the course of the next few months, which of course naturally would drag Bitcoin along with it. With that being said, the next chart that we want to look at that's definitely a good kind of macro indicator chart is the DXY, which is the strength of the US dollar. Those of you that are new to this chart, in a nutshell, it's just taking the dollar bill and putting it up against a basket of some of the other major currencies, things like the yen, the euro, the pound, right? And basically, if it's outperforming those, generally speaking, it's going up, and if they're outperforming it as a whole, then it's going down. The reason why this chart's significant to traders like myself is that on some of these zoomed out bigger picture charts or time frames, in this case the daily, what we've noticed is that it has an inverse correlation, for the most part at least, with a lot of your stocks, your risk on assets, right? Things like Bitcoin. If this is going up, generally that's bad for stocks and crypto, and if it's going down, that's generally good. But one thing to take a quick note of, and I mentioned in my last video, is there have been times throughout history, I'm not going to go over them in this video, but I did in one of my previous videos, where the DXY has generally trended to the upside, and crypto and stocks have also trended with it. So it's not always inversely correlated. I can say that during the heart of most bear markets, it most definitely is, but often as you're kind of seeing the end of the bear market as it transitions into kind of the boring period, or maybe even the accumulation period for the next bull run, you can see this go up and not see stocks take such a big hit. But that being said, overall, it's always still better to see this thing trending down. Well, in a previous video, we also mentioned, if you zoom out, especially on something like the weekly time frame, you can see that after it broke above this kind of major zone where it was resistance, it broke above it, and we talked about how a support bounce, previous resistance is future support, a support bounce could make sense. And, if you zoom in again to the daily, which we will in just a second, you'll see that more or less that's what's happening. However, as we zoom back into the daily chart, you can see by this vertical line that I've put on the chart, which is from the 2nd of February, where the DXY more or less found its local bottom and began to bounce. If we go back over to the Bitcoin chart, I've also put that same vertical line, and you can see that yes, while initially that bounce was met with a pullback by Bitcoin, somewhere along the lines of around 10-11%, that during this period of time when it's still trending to the upside, Bitcoin actually found its footing and not only recovered that entire 10 or 11%, but went on a rally of almost 20%, upwards of 18.5%. Now, of course, now we've seen another small pullback from that local top of another 8, 9, almost 10%. But if you look right now, Bitcoin again looks like it's attempting to put in a higher low, a low that's higher than this low, and it's looking like it kind of wants to continue this uptrend. Well, how will that come into play as it relates to the DXY? Well, obviously time will tell, but let's just say for the sake of argument that my idea that, hey, we might be going through a period of time where the DXY can generally trend up and Bitcoin can trend up with it. Well, what are we looking at least here on the daily chart for the DXY? Well, in the short term, we're breaking above this blue 200 EMA, and it looks like, we're potentially going to make another retest, bearishly at least, as long as we're underneath it, of the 200 SMA, which I think is probably the little bit more important moving average. Now, this was our local top, right? That happened back in September of last year. We generally trended down for a little while. We are experiencing kind of a breakout. Well, what we have to assume, at least in the shorter time frames, is that Bitcoin's going to have a harder time moving up as long as this is moving up, but it most likely has some of its bigger moves up when this moves down. You kind of think of especially bull markets, and we're not in a bull market now, but often you'll see that during a bull market, negative news or anything that's negative will make the price pull back, but it won't pull back very much. And any sort of positive news, it goes crazy. The reverse is obviously true in the bear market, where every time you have good news, it's barely bringing the price up. And the minute you hear even one hiccup, some sort of Fed news comes out, and of course Bitcoin takes a big dump-ola. So as we transition to what I think is going to be kind of your accumulation, a slow grind to the upside for Bitcoin, I do still think it's better if the DXY is going down than up. I just think that what could end up happening is when it's going up, Bitcoin might be going more sideways, slowly down, little small retraces. And when the DXY goes down, you know, that's when Bitcoin might have its next explosive moves to the upside, right? So what we'd be looking for as we transition over the Bitcoin chart in just a minute, as it relates to its correlation with the DXY, is if this, goes up over the next couple of days, half of this next week, and retests up here around 106.5, which would be a retest of the 200 simple moving average, you could expect Bitcoin to continue to consolidate, maybe slowly move down over the course of if this takes place. But at that point, wherever Bitcoin's at, if this looks like it's starting to get rejected on these higher time frames, then you might look for Bitcoin to begin its accumulation and possibly its next leg to the upside, and what I would expect on that we'll talk about in just a minute. But on the DXY, if this does, retest this bearishly and begins to trend back down here, you might see something like this where it first pumps up, then it comes back down to kind of put in its own little higher low, right? This being the low, it could come back all the way down, but I like to work under the assumption that it could put in a higher low versus, what we call a double bottom in trading. Both things are bottoming patterns. I'm not necessarily suggesting that this support is not going to hold and we're going to see some crazy bull market out of crypto. I'm just thinking over the next few weeks to a month what Bitcoin might be able to do as far as an upside move and how the DXY would play into that. So if this were to get rejected here, you might see something like a 2.5 to 3, maybe even a 3.5% move back down, somewhere between 101.5 and maybe as high as 103. And what would or could that look like for Bitcoin? And alas, here we are, the Bitcoin chart. This is the daily chart, and what I wanted to give you guys kind of an update on, bigger picture, that's why we're on the daily, is just what the price action has done over the past few weeks as we've broken above some major levels, and kind of what it's doing now. Now, I know a lot of people are a little bit concerned because, we broke above 25K and now we're experiencing a pullback. But I'm going to talk about a few key levels that to me do matter more than where we're at now as it relates to how far this rally, if you want to call it that, whether it's just a bear market rally or maybe the beginnings of something bigger, how far can it go? And I think a lot of that does depend on these levels. So let's talk about them. The first and probably most important one to me is this red zone. Now I need to change it to green. In fact, let's just do that real quick while we're making this video. On my charts, you'll often see that I use red as overhead resistance. And once we're above those areas, anything below, I typically turn to green to represent more or less a zone of support in this case. Now this area, if you can see, it's the area that we had a bull trap previously back here in September of last year. We broke above it, didn't hold, huge sell-off, and we were back down here in this zone. Then we came up here, got rejected twice, put in a little bit of a double top, and then we saw the giant dump that happened in early November of last year in 2022. We even crashed all the way to an even new zone down here where Bitcoin finally found its footing between about 15, 16, 17K range, right? So really, in my opinion, for structure, bigger time frame structure to remain in place as far as this being kind of an upside move, it's really this green zone between about 21,250 and about 21,750, 21,000, just call it 21,800. If we lose that level and start closing candle bodies, 2 hour, 3 hour, 4 hour candle bodies below that, there's a good chance that we're going to lose that support. And at that point, I would say it's in the cards to retest the daily 200 simple, wherever that may end up being at the time. And, that level back around the lower 20,000s. Now, I don't know that we would retest 20,000 on the nose. It really would kind of come down, in my opinion, to where this moving average is at the time. Could be somewhere around 20,500, which has also been an area of significance in Bitcoin's past. But really, it's just as simple as that to me. Now, granted, a wick down there or something because some news comes out, and wicks back down to 21,200 or something, as long as it's able to recover and people buy the dip, so to speak, it wouldn't concern me. What would concern me, like I said, is if we put in a lower high or a lower low, sorry, than this low, which wick decked down here at about 21,400. At that point, you have to assume you're going to put in yet another lower high and start doing this, right? You're going to start trending back here and eventually retesting some of these lower prices, which, you know, for those of you that are either bears or maybe someone looking to get in at lower prices, you know, that wouldn't concern you. But that would be the level I'd watch out for to the downside. And then to the upside, I really think this could end up playing out as early as tonight, tomorrow, going into traditional markets, kind of how they open. But if you look at this little zone that we were kind of in, consolidating upwards before we ultimately broke down, but then had a big pump, right? That previous kind of top of that zone was sitting at about 23,750. The lower side maybe being about 23,500, which is kind of where we're at now. If we can start closing 2, 3, 4 hour candle bodies back above that, you have to at least in the short term expect a run back up to retest the previous high, which happened a few different times throughout last week, but the most recent looks like it happened on Tuesday of last week. You'd expect us to at least go back up and test those highs at about 25,200-ish, right? And again, if we were to break above that, well then, you know, more upside is in the cards. Good chance we head up to this target, which was a previous major low back here in May of 2022, which is clear up at about 26,650. So we'll keep an eye on that. But again, remember 21,700-ish is kind of my line in the sand, so to speak. It's not quite that simple, and I don't really like using those kind of terms, but that's kind of the area or zone I'll be watching for as far as needs to hold a support, or we're likely to see lower prices back down below 21,000. And, you know, to the upside, we're approaching it now. I think the next few hours and tomorrow when stocks open, we'll kind of get our answer. But look for a break back above about 23,750, and at that point, I would expect it back above 25K in the short term, and we'll kind of go from there. And that'll be a wrap for today. I appreciate each and every one of you for stopping by. As always, if you feel like leaving a comment in the comment section, that would be greatly appreciated. Otherwise, on the way out, if you haven't already, please remember to like and subscribe, and we'll catch you in the next one.
It's TIMECODES.